Super good morning and wishing you a wonderful Wednesday ahead. Welcome to today's episode of Morning Wealth. Flat session as yields rise. Earnings update from Microsoft, Visa, Starbucks, UPS, GE, AMD, and more earnings from Google. Those are the things that we will talk about today. US stocks edged away from record territory Tuesday as investors sold shares of technology and communication stocks as treasury yields climbed. The S&P 500 ended the day in the red for the first time in 3 sessions, halting the stock market's steady grind higher. Tesla shares weighed on the broad index after investors' underwhelming response to the electric car maker's latest quarterly report, underscoring the high bar the market has set for stocks this earnings season. Shares of other big tech companies followed Tesla lower, while investors also contended with the third straight day of rising bond yields, bringing the yield on the benchmark 10-year to about 1.62. The Nasdaq was down by 0.3%, the S&P down by 0.1%, and the Dow Jones was also down by about 0.1%. About 30% of the companies in the S&P 500 have reported results so far, with nearly 88% topping analyst expectations. But just 57% of the reporting companies have seen their stock prices rise in the wake of their reports. Investors appear cautious, pointing to risks stemming from elevated valuations, the potential for a jump in inflation, and the raging epidemic in India. Among the biggest movers in the regular session, shares of Tesla was down 4.5%. GE slipped about 0.6% after the company's jet engine business and divestitures weighed on its quarterly results. Profits shrank at Eli Lilly, pulling the shares down by about 2.7%. 3M shares fell by about 2.6% despite reporting better than expected earnings. Delivery companies were among the S&P 500's best performers. UPS jumped about 10% after the shipping company topped forecasts for both profit and revenue. FedEx, which reported earnings last month, also rose by about 4.3%. Starbucks disappointed. Global same-store sales rose 15%, falling shy of the 17% estimate. That overshadowed a better-than-expected rebound in US stores and a boost to its full-year sales forecast. Overall spending on Visa cards rose to an estimate topping $2.4 trillion this quarter, helped by stimulus checks. It said it's starting to see the beginning of the end of pandemic spending woes. AMD gave a strong second quarter sales forecast, saying revenue will be about $3.6 billion plus or minus $100 million. Consensus is for about $3.28 billion. Texas Instruments said profit in the current quarter will be $1.68 to $1.92 a share on sales of about $4.3 billion to $4.47 billion. Estimates were for about $1.68 and a $4.16 billion print. In after-hours trading, Microsoft shares fell after topping Wall Street profit forecasts by shedding more than 3%. Microsoft Corp reported quarterly sales and profit that topped analyst estimates for the 9th straight quarter, lifted by booming cloud computing demand. This time, the investors weren't satisfied. Microsoft Azure, which sells internet-based computing services to corporations, saw sales increase by about 50%, matching the gain posted in the previous quarter. The company's video gaming activity has been particularly hot during the pandemic. Xbox content and services revenue increased 34% in the latest quarter, aided by the recent release of 2 new consoles. Xbox hardware revenue more than tripled from the previous year. Revenue from Surface laptops, which have been popular with people working and learning from home, rose about 12% from a year ago. Microsoft also benefited from the broad strength in the advertising market. Its search advertising business was up 17%, and ad spending also helped lift revenue at LinkedIn, a professional social network, by about 25%. Overall, net income from the recent period came in at $15.5 billion or $2.03 a share. Analysts had predicted $1.78 per share. The results included a tax benefit related to a decision by the Supreme Court in India. The revenue gain marked the 15th straight quarter of double-digit growth. Moving on to Alphabet. Alphabet's report was better received by investors after it broke sales records for the first quarter, sending shares up nearly 4% post-trading. Search and other related businesses generated sales of about 31.9 billion in the first quarter. The Wall Street estimate was about 29.9 billion. YouTube ad revenue surged good 49% to 6 billion. Analysts were looking for a 5.7 billion print. YouTube Shorts, its competitor to TikTok, logged about 6.5 billion daily views as of March, up from 3.5 billion at the end of 2020. The company's cloud division, led by Thomas Kurian, is wooing corporations and other large customers in a bid to catch market leaders Amazon and Microsoft. Google's cloud revenue jumped to 4 billion, in line with what Wall Street was expecting. Alphabet overall generated 17.9 billion of net income, or $26.29 a share in the most recent quarter, compared with 6.8 billion or 9.68 billion a share a year earlier. That's a 162% increase from the previous year. Google said it would repurchase an additional 50 billion in shares, fulfilling the wishes of investors who had been monitoring the company's swelling cash reserves. Just to put Alphabet in perspective, the company's search engine has a lock on 92% of worldwide traffic. Its map offering has a 89% share of navigation, and YouTube accounts for 73% of the online video world. That's the kind of dominance that the company has. That's the update. Stay safe and healthy, and I'll speak to you tomorrow.